So here are three things that you need to know right now. More retailers out with earnings this morning. This time, we heard from Macy's, Dollar Tree, Dollar General, all of them out with their numbers this morning. And all of them, and this is a change, isn't it, are trading higher ahead of the bell this morning, and higher in double-digit terms in all of these cases here this morning. So it's really interesting because now we have the question before us, I think, for the retailers of what's happening in the macro environment versus what these individual companies are doing. So let's run through them. I want to start with Macy's here because Macy's has obviously been struggling for quite a while, but the company is now raising its profit forecast, and that's after it came out with numbers that were better than estimated by a pretty wide margin here, as you can see, particularly on the profit line. And this is, again, a change here. We've been watching gross margin and inventories for these companies so closely. So let's talk about them here. Gross margin up to 39.6%. I'll say that again. Gross margin rose at Macy's,
very impressive,
which is not what we've been seeing. And inventory was up by 17%, which is a smaller rise than what we've been seeing from other companies.
Right. And some of the retailers we're getting into now, we've already had a lot of the big ones report. Walmart and Target were famously last week. Those were disasters. The smaller ones, though, that have not fared as well as some of the bigger ones throughout the pandemic, I think the comps are just a little bit easier because they were performing so poorly in the interim. So it's nice to see these numbers pick up. I think we need to, treat them with a grain of salt. Let's go to our heat map for the retail intraday. And I have the market quotes for the pre-market here. In the upper left, there's Dollar Tree. We're going to get to that in a second. That's up 15%. Macy's was up 9.09% yesterday. It's up 13% in the pre-market. And let's take a longer-term chart. This is a year-to-date, and you can see Macy's, like so many other stocks, just kind of fell off a cliff in early May. Here's a 3-year look that captures all of the pandemic, and it's still actually in the upper end of its range there, just barely. But here's a 10-year look, and you can see quite depressed, off 50% and off even more, probably more like 75% from this high in 2015. So a lot of these retailers have been trying to fix their digital strategies and are finally probably catching up. So it's nice to see them in a position to announce these numbers now.
There's also been a shift in what consumers are spending on. We saw that very clearly with Walmart and Target. In the case of Macy's, it says people are not spending as much on things like athleisure and on home goods, but people are spending more on stuff to go out in, apparel to go out.